Continuing Care Retirement Community in Huntsville, Alabama is next on the list. Excited to go over this one. It's called Magnolia Trace in Huntsville. And if you're at all familiar with Huntsville or Northern Alabama, just a wonderful part of the country. So welcome to Heritage Wealth Planning YouTube channel, my friends. If you like what you see here, subscribe down below. Once you subscribe, you want to hit the little bell up there to be notified for future content because we do a video a day or more. This is our third one today. We did one on taxes and retirement planning earlier. We did one on financial planning software to show you how to take charge of your own financial planning software so you can take charge of your financial planning. And now we're going to talk about the Continuing Care Retirement Community in Huntsville, Alabama. So let's dive right into it. And basically the premise of this is I did a thing yesterday on the AXE Retirement Life Communities, and they have a bunch of different ones. And this is not, I'm not endorsing these guys at all. That's not working the way I was hoping. I just like the annual report because and of course, an annual report, if you're familiar, no one's going to issue an annual report that makes it look bad. But what I liked about it, it gave us just a quick and easy list of all the litany of different CCRCs they have, and being favorable towards Huntsville, Alabama. Huntsville is just great. The Huntsville Stars, I went to go see them play one of their last games because that AAA team, I think it's AAA, had been around for a long time. And then they moved, and so I was there. I actually saw them. I think might have been their last game ever in that, whatever that stadium's called. So anyway, I'm a big fan. We did this one yesterday, Lanier Village, or the other day, Lanier Village Estates up in my neck of the woods. But I figured I'd dive into a Magnolia Trace here as well. So let's just dive into it. So we got, as what I told you before, is you got to click online to watch their video to get the info on their pricing. And so I did that, and you should do the same. It's free. It only takes 2 minutes. And so here we got, a happy couple, and I guess the lady's telling them, about the fees, and she's like, yeah, the fees are great. So let's dive into it. Now, a couple of things. Huntsville, Alabama, my friends, is much, much cheaper than maybe your neck of the woods if you're up in the Northeast or in California or Seattle or something like that. And it's interesting, too, because Magnolia Trace, they offer a bunch of different plans here. And I thought that'd be interesting to go over because we have, 1, 2, 3, 4, 5, 6 different plans. I mean, look at that. So let's talk about it. So the AXE Lifecare Premiere is the most popular of the AXE financial options. Features an entrance fee and a monthly fee that secures your residency at an AXE community. So that's just any AXE community. Not specific to Magnolia Trace. With AXE Life Care, monthly fees will never increase solely as a result of needing a higher level of care. And so I did the episode I did yesterday. We talked about, let me actually just go back here. We talked about how you have a lower fee if you, basically what's going to happen is when you're in independent living, you're not paying as much. There's just no other way around that because you're self-sufficient. You don't need 24/7 care. Then you go to assisted living, it's more expensive. And then you go to nursing home, is much more expensive. And so what happens is when you're going to one of these facilities, when you're buying essentially the option, the level premium, it's almost like whole life insurance. You're paying more today to have a flat fee fixed for the duration of your contract. I hope that makes sense. So you're basically saying, I don't want the risk. I'm basically buying an option that I don't have the risk, that I have this significant fee jump if I needed care in the future. Now, of course, the drawback is if you get hit by a bus and you don't need care, you paid more for that option. But I hate to say you're dead. You don't care. But with that said, you got to see how it flows through the cash flow. And that's definitely the most popular. It doesn't shock me because people go to these communities and say, man, I'd rather pay an extra $500 a month or whatever it is to guarantee I have that coverage without an increase in my monthly fee because of a need of a higher level of care. Now, they're not saying they're not going to increase your monthly fees, mind you. They're saying we're not going to increase it to you specifically because of a higher level of care. Asset preservation plans for those who desire the highest level of asset preservation. This plan offers the same benefits and lifestyles as the AXE Life Care, but a higher level of asset but it has a higher level of asset protection. Then AXE Life Care Premiere with a lower entrance fee. This plan is designed for those who enjoy a comfortable and predictable income. That doesn't make any sense to me. The asset preservation plans for those who desire the highest level of asset preservation offers the same benefits and lifestyle, but has a higher level of asset protection with a lower entrance fee. That must mean the monthly payments are higher. We'll have to dive into that more. Asset preservation. Monthly payments are higher, lower interest fee. There you go. Okay, because then you see the Lifecare income preservation guarantees going to be the exact opposite. So they're going to say is for those who have a strong asset base with Axe Lifecare income preservation, your assets fund the entrance fee while you enjoy a higher income protection with more valuable, value-driven monthly service fees. So essentially, in this case, you're going to pay less up front and more on the entrance fee. Higher entrance fee, lower monthly payments. This one is higher monthly payments, lower entrance fee, and this one's just a flat across the board. Axe Lifecare 50, and we talked about this on one I did in Lanier Estates, offers a refund of 50% of the net entrance fee to those who wish to provide a financial legacy. I just not the biggest fan of that, actually. Under this plan, the entrance fee, less an admin fee of 5%, amortizes over a 25-month period with the balance being returned to you or your estate when your occupancy ends. And so basically what they're saying is we're going to charge you more up front because you're going to get more when you die or you leave. And so a higher entrance fee on the front end, monthly payments will still be the same as what it is up here, right there. But they're going to charge you higher on the front end, which you'll get back on the back end at your death. And I don't think that's a good use of your funds. Modified life care. I like this a lot. And I didn't see this on two of the other ones that I looked at that are not Axe communities, but I'm a big fan of this. If you already have long-term care, you get a lower monthly fee because they're going to bill your LTC for some of the care that you need. So I'm a fan of that. And I caution you, if you do have long-term care and you're thinking about getting rid of it, just hold tight. You can save a boatload of money with Axe Modified Life Care. Now, before you sign the contract, just make sure you talk to them. Say, hey, I'm thinking about this. I just want to make sure that A, my long-term care is comprehensive because it's based on your comprehensive plan, and that B, that not only is your care comprehensive, but that they're going to cover it and they're going to do all the due diligence to build the John Hancock or the Genworth, wherever you got your plan through. And Act Preview to Life Care. That's new. I'm not familiar with that. So let's read this. Offers the opportunity to try a maintenance-free retirement lifestyle with no capital investments. Okay. You're basically renting it. It's a 1-year agreement with no interest fee. Access to higher level of care is based on the availability of provided per diem rates. Should you meet your financial medical requirements for Axe Life Care, you can change the life care contract. So good. I like that. You're not committing with a $500,000 or $400,000 interest fee. That's good stuff. And monthly fee, we talked about this before, my friends, includes your utilities, air conditioning, all that stuff right here. I don't know. Do they say? Yeah, I guess it includes even in your cottages, your independent living facility. Maintenance, replacement equipment, personal health service, one chef prepared meal each day of the month, and you can get more additional meals if you want. I'm a fan of that. So I mean, if you just, again, I think it was like $320 a month. Don't quote me, but there's some amount of money that you're paying for the meals, and that will include a real live meal that you can get, and presumably you can take some apples home with you. So I think it's a good plan because don't forget, breakfast is always the cheapest ones, and dinner that's the most expensive. All right, so here we go. Here's the pricing for the Magnolia Trace. And we're just going to go back to this one right here because we were looking at 2-bedroom. There's a Dogwood, the one in Georgia we were looking at. And for a 2-bedroom, this is just a Lifecare Premiere. So let's go back up and tell you what the Lifecare Premiere is. It's the most popular. All right, so you're just basically saying I'm going to pay an entrance fee. We're not going to have a refund. I'm going to pay an entrance fee, and I'm also going to have my monthly fee will lock in if I need continuing care in the future, assisted living or nursing home. And so here you're paying basically $3,000 as an entrance fee, $300 as an entrance fee, and your monthly fee is $3,500 a month. I don't think that's bad. And when we did the study looked at the balance sheet for these guys, and again, I'm not a chartered financial analyst, not a CPA, but it just seemed to me that they had enough liquidity and assets to cover any significant shortfalls that could change. But it seemed to me like it wasn't a bad deal. And so I look at that, I'm like, $3,500 a month. And again, just say that's a 2-bedroom. Now they do charge you, at least in Georgia, they charge you an extra $25,000 for the entrance fee if there's two people. So if you're doing a 2-bedroom, you probably have 2 people, so you'd add $25,000 that, and that makes sense because you're going to get another meal. All right, so I mean, you and your spouse are both going to eat at least once a day. So you think about that. You have no property tax. You get 1 big meal a day. You got no utilities, no electricity, no maintenance. I mean, and you got 2 bedrooms. Now, I don't know if these are, they charge, 25. Okay, here we go. So 25 extra for maintenance fee, for an entrance fee. There it is. And then 1,200 extra a month if you're adding a person here. So here, I think that's kind of misleading. 2 bedroom. So basically be 300 to 330 or so, and $4,700 a month roughly. And I don't know why they don't put that on there. That's anyway. They should do that. All right, but now you know. So it's not 3,400. It's basically 4,000, 4,600 a month on top of the 325,000 that you're putting in as an interest fee. And you don't get any back, but you don't have to worry about the monthly fee changing because of your increased care needs. Life Premiere details. Entrance fee, monthly fees, okay, price subject to change. Entrance fees becomes a deferred payment on 10% during the first. Okay, so basically you're saying, hey, if you're signing the contract, you're going to pay 10% on the upfront, all right, and that's what they're going to get you. Typically, you can sell your home and repay the rest of 90%. So this is asset preservation, all right? So this is where it's for those who desire the highest level of preservation. The plan offers the same benefits. So again, your monthly fee is going to be reduced, wasn't that it? As a higher level than asset preservation. Lower interest, you have a lower initial entrance fee, but a higher monthly fee. So what did we look at? I think we looked at the Royale, didn't we? We were looking at the 2-bedroom Grand Royale 1 and 2. So let's just compare apples to apples. Royale 1 and 2, right here. So their entrance fee here is roughly $75,000 less than what it was in the other contract you can do, but the monthly fees are higher. And again, so you got $5,200 as opposed to $4,400 or $4,600. Yeah, so there you go. So you're basically you're saving $75,000, but instead you're paying another. Let's see, take my trusty calculator, $4,042.57, and the other one when I came up here was $3,450 plus 1,220. That's 3,450 plus 12. That's not much less. So up here is 4,670, and down here is Grande or Royale 52, 4,670, 52.57 minus 4,670. So you're saving $600 a month. You're paying $600 a month more here, but you're getting $75,000 less on the entrance fee. And then we just do a simple $75,000 divided by $600 a month. That is going to take 125 months for that to equal out. So I'd rather do this right here. I'd rather pay more on the high end, less on the front end, less on the entrance fee, and more as a monthly fee for sure. All right, then they got, again, they talked about all this with the utilities, the whole thing. Again, 1 chef prepared meal. Let's see, at the end of the entrance fee is fully amortized. Okay, so basically at the end of the 50-month period, you're not going to refund. And the same thing as the first one we talked about. Here's the income preservation. Here's where you're going to pay less up front. You're going to pay less as a monthly basis, but you're going to pay more to get in. And here we got in the Royale, we're paying 25, so that's 365 to basically between 350 to, well, actually 375 to 400 roughly. And here you're paying a lower monthly fee, and that's going to be 4,000. Let's see, Royale, 4,360. All right, so, but you're getting higher upfront fee and a lower monthly fee. But again, that's not that much lower. That's only $400 lower a month than the first one was. So of the 3 options, I like this one best. I like the asset preservation because you're keeping your assets. Now I thought that would mean that you're going to get your money back, and that's not what they're saying. They're just saying you pay less. So you get to keep more of your assets for a higher monthly fee. I'd rather do that for sure. Here you get a higher monthly fee with a little bit, about $400 less a month. And the first month, you're getting a middle range fee and a middle range entrance fee as well. All right, so let's keep going down here. And same thing after 50 months, there won't be any refund. This is the 50, where you get 50% of your money back. And just like in Georgia, yeah, you're paying a significant amount more up front for, what's that, about $450 to $500 almost up front. And your monthly fee is $5,000. So basically, you're paying $5,000 a month on the high end for the fee, and you're paying a lot more entrance fee to get 50% of your money back at the end of the day. And it's just your money on the entrance fee. It's not your money on the monthly fee. So I don't like that. And the reason is they're not charging it. You're not getting interest. Essentially, loaning the money, and they're going to pay you back your money without interest. So I'm not the biggest fan of that, but I'll leave that for you to determine. Now, I do like this. This is a modified life care. Watch this. This is if you already carry long-term care insurance. Watch. Royale, $200,000, let's say $225 to $250 to get in, and then $4,200 or so as a monthly fee. See, if you have long-term care, I'd be looking at this. Absolutely. I mean, you get a whole lot less entrance fee, and then your monthly fee is I guess that's almost on the low. I think that's the lowest there is. All right, so it's desirable for anyone who cares long-term. You pay a lower entrance fee and lower monthly fee this plan during your time of independent living. If you later require care, your long-term care insurance policy will be used towards a per diem for cumulative. I'm going to interview one of these people. I just got to figure out, what does that cover? How do you know if it's good to have that long-term care policy or not? Because this sounds like it could be a smoking deal, actually, and I need to dive into that. All right, here's the one if you just want to preview it. This is pretty cool. No entrance fee for you and your spouse. It's $5,300 a month. Now, I don't know how you'd afford that if you have a home that you're still got. Hopefully, you don't have a mortgage, but if you got a home outside that you're still maintaining. But let's say you're renting someplace, you're like, hey, screw that. Let's go rent to this place for $5,300 a month and see how it works. I think that's pretty cool. I like that. I think that's a fantastic opportunity. So there you have it, my friends. That's the Axe Magnolia Trace. Again, I like it. I mean, look, I'm going to interview a guy later today from the Villages, and we'll see what a continuing care retirement community really is when it comes to a guy. Let me go back to myself so you can see old Big Josh. So I'm going to interview a guy today from the Villages. So we're going to see what a guy's going through right now. And I don't know if he's married or not. So we'll find out. He does a YouTube channel. It's pretty interesting. So I'm really looking forward to having that talk with him. But, so far, so good. I got no problem with these things as long as they don't go bankrupt. And the whole risk is if you don't give them all that money up front to get the 50% back, then there's less risk to you. No other way around that. So I hope this helps. If you like it, Magnolia Trace, the one we did here today, it's not a recommendation. It's up to you to decide. But if you have any questions, thoughts, concerns, put them down below. As always, if you like the content here, hit the subscribe button down there, and then hit the little bell to be notified for future content. And a thumbs up always helps. If you give me a thumbs up, it tells a Google overseers that say, hey, someone actually likes this. Let's send it to more people. So give me a thumbs up if you would be so kind. The blog is heritagewealthplanning.com. Got podcasts, got my videos there as well. Got my blog posts, so don't forget to go to the blog either. Hey, we'll see you next time. Thanks, guys.